Hi, welcome to number 8 in the company account questions and answers. Here's a question which has a couple of little extras in there for us. It's a long one, uh, requiring a lot of sort of picking data out, put them in. Don't ever worry too panicky about these long questions because you can pick marks up as you go. So even though you might feel you've made a bit of a muddle of it, providing you've got the bulk of the information in the right place and you've got shown some understanding, um, that you can actually pick up questions quite quick. Okay, well, what we've got here is a balance sheet or a trial balance, I should say, normally needs. Uh, and okay, we've got some fixed assets here, cost less provisional provision for depreciation. So hopefully you know how to depreciate assets and what it means when it appears in this form. We've got some revenue, we've got some purchases, and going down some costs. So in company accounts, costs are normally categorized, expenses, costs, that is, expenses, into admin, distribution, and finance. So that's something we need to make sure we put the right figures into the right headings. Inventory, watch these dates very, very careful. We're told that this is the balance at the end of the year, and we're given inventory at the start. We've got some trade receivables, trade payables, cash at the bank, and we've got some equity information there. Ordinary shares, share premium, part of equity. Debentures are not part of equity, they're part of long-term liabilities, it's borrowed money. And we've got some retained earnings, which is part of equity. Okay, we've got some notes below. These are the ones you've got to be careful of. And make sure that you read the information before you rush in and try and answer the questions. Believe me, understanding the data makes you be able to answer the question that much quicker. Okay. So if you're not so hasty, less haste, you will operate just that little bit quicker. So what we've got, a revenue included a deposit from a customer for goods to be delivered in March 2024. That's not part of this year's sales. Okay. So because it belongs to next year, it's a deposit. So that is actually, think about it, it's a current liability. So the double entry will work for us. Okay, we've got some inventory here at the end of the year. That's the figure we need. But of that, we've got some inventory that cost, but now have a net realizable value less than what they cost. Now, remember, when you're valuing stock, if you don't know, you know now, I'll tell you what we'll do. We'll save ourselves some time. We've got to look at the difference here and say to ourselves, well, we've lost 5,800 in value of our stock. We'll need that figure later. You must take value of stock, either what you paid for it or the net realizable value, whichever is the lower of the two. Do not do what you think it's worth when you try to sell it. So remember, that's with stock, it's a current asset. We assume it's a cost unless it's been soiled, damaged, or something like that, but it's lost its market value to below cost. It's the only time you change that cost. We got land and buildings acquired, revalued. There we are. Appreciated, if you like. So if we just go back to what was on the balance sheet, it's 600 less 72. So the value's gone up. Land does normally increase in value. Okay, we've also got a new photocopier. We paid 80,000 for it. Now I've got to carefully that we have to assume that 80,000 was added to the equipment cost, but it was traded in for a fully depreciated old copier for 10,000. That's handy. That is a profit on disposal because it's been written off. So if you can claw back anything, that adds to the business's profits. And the old copier had been purchased in 2017 for 40,000. Okay, so that obviously will disappear from the assets, and the balance had been paid by check with the payment already recorded. Okay, it's gonna makes life a little complicated later on. Depreciation is to be charged as follows: land, nothing, and buildings to be depreciated by a further 15,000. Well, that was rather kind. We got the figure done for us. We don't have to do any calculation. And equipment to be depreciated at 25%. Now, what makes that awkward is the fact that we've messed around with this photocopy, and we deal with that a little later. And a full year's depreciation to be charged in the year of purchase, and none in the year of disposal. So in other words, all the depreciation's done at the end of the year, not during it. And we assume that the assets had the full year's depreciation on. Makes life a little easier. And all depreciation charges to be included in the admin expenses. That's helpful. And dividend been paid, and interest on debentures not been paid. Okay. Well, just go back that interim dividend. Okay, it's so easy to skip past that. Look at what it says at the end. It's been included in admin expenses. No, no, no. The dividend is not an expense. It comes off the equity of the shareholders. It is most definitely not an expense. So we're going to have to take that off at some point. And at some point, okay, and that's where there is so many different answers from students, and you can have 10 different answers, and all 10 enjoy full marks. So you're going to have to bear with me. I'm going to do it sort of my sweet way. So let's start with an income statement. Well, let's start with the revenue. Well, that's a nice straightforward one, because the revenue is already given to us. I'll put it over here as 2354. Or is it? Now, think. Is there any other reason for changing the revenue? I can't see anything at the moment. And this is where you've got to have your eyes everywhere. I'm doing exactly the same. Okay, well, let's have a look on the cost of goods sold. Okay, or COGS, or cost of sales. So I think we should begin with the opening inventory. Well, that's the inventory at the beginning. There it is. Okay, let's try and tidy that up. I'll indent that a little bit so that it's clear for me to show these figures. You don't have to be so picky as I am. The inventory at the beginning of the year, we've got that figure. We've also got the purchases, so this is fairly standard. Okay. So our purchases, and we, of course, we've got the inventory at the end of the time. So let's just, there's the inventory. Now be careful with this, because I know there was something that needed changing. So if I can put the inventory at the end, okay, the inventory, but okay, we can take the purchases. That's straightforward. Again, always looking around. Is there anything to change the purchases as stock? I mean, in a partnership, it could be the stock has been taken away. Okay. Have I finished? Obviously not, because I've got to do the closing stock. Let's go down and get that value. But conveniently, we've already worked out the fact that the stock isn't as valuable as we thought it was. So what I've got to do is the inventory is not what it was, because I'm going to take away from that, minus from that inventory, this figure here. Okay, which now gives me a more accurate value of the closing stock. So all the closing stock is at cost, except that other bit, which dropped, and we lost 5,800 in the value of the closing stock. So the cost of goods sold will equal now opening stock plus the stock that you purchase. So that now becomes the stock available for sale, less what we've got left over. So we don't want to include that in our cost of sales. So we've now got our cost of sales 1,303,800. Right. So that actually now gives us gross profit. Okay, well, gross profit is simply revenue minus cost of sales, COGS, if you like. Okay, well, I'm sort of feeling confident that that might be correct. So let's for ease of understanding, let's see if we can box that in. Right, okay, well, I've already said that expenses for companies are categorized into three areas: distribution, admin, and finance. Well, if you want, I'm going to start with let's start with the easy ones. Right, no harm. It might help your self-confidence if you do start with the easy one. We've got the distribution costs. Just looking around, you see, if you've read the data, you will spend less time scouting around to see if there's anything you've missed. So my distribution cost at the moment is as per trial balance. There were no other costs involved. So that's one, bang, done, finished, out of the way. Okay, let's now look at the financial charges. Okay, well, again, were there finance charges? Well, we've got to look around to see, is there any? There was. And this is where we've got to be a teeny bit more careful. There were financial charges here, 9,000. But look, the debenture interest was not paid. Now, the question doesn't suggest that the financial charges was part of this. So I'm going to have to assume, no choice, that the debenture interest has not been paid. Now, this is an expense because it's borrowed money. So that now equals, well, we're told that it's 200,000 times the 6%. So I'm going to add those two figures up. So again, be careful with those type of questions, because it may well have been, for example, I've seen questions where it says that we haven't paid the last quarter of the debenture interest. So 9,000 could have been the first 3 quarters, with the extra 3,000 finishing it off. This is where you've got to read the question careful. But it simply says in the question down there, debenture interest not paid. Okay, so that added a little extra. Now we've got the admin charges. Well, here we go. There's going to be a fair bit on this, isn't there? Now, hopefully you've seen. Let's start with the trial balance figure. Well, the trial balance says that the admin expenses is 674. Now, if you remember, immediately it comes to mind is we've got this sort of situation where the dividend was actually, you see, interim dividend paid 30,000. There's no way that should be included in our expenses, any expense of any kind. So I'm gonna put a negative figure in there, minus 30,000. Right, to indicate I want to take that figure away. Just to make an even heavier point on that, I'll put it in red. Okay, so what else have we got? Well, we've got some depreciation to work out, and that's gonna take me a little bit of working out, I think. So what I'm going to do is, I think it's important here. First of all, we can start with the land and the buildings, can't we? And it's only on the buildings, because I think that's just given to us. As I said, if you remember, my earlier comment was that's rather kind. So let's just take that figure as 15,000. There it is. Okay, notice I'm pulling these figures across again. I keep making this point, but it's really that you can go in, play around with the figures to see how it affects the overall shape of things here. So right, now for the depreciation on equipment. Well, I'm going to do a quick bit of working out there because it's not so straightforward. Well, first of all, let's start with the trial balance figure. Let's put it as depreciation of equipment. Okay, and I'm working on a spreadsheet, so I can just move the data down if there's not enough room. Okay, well, let's start. First of all, there's the trial balance figure. Okay, that's 278. You see, what I'm trying to do here is to work out the value of the equipment that we now have before I do the depreciation. So let's start off. Let's see how much we've got in the way of equipment. First of all, there's 278. That's going to be my starting point. Now we're going to add in now the trade-in for the new one. The new one has already been included into the cost. But what I want to do is I want to put in the trade-in figure, because we can add 10,000 to that, because the point being here is that the equipment cost us 8,000 plus 10,000 valued on the old photocopy. This seems a bit odd to me, because we're going to put that in, then we're taking it away, because of course we made a bit of a profit on that. But anyway, look, we're going to put the trade-in value in here. Just really, it's important to add that in. So I want to add the trade-in. As extra. And then the disposal, which we were given off 40,000. So what is the cost of this equipment? Well, what we've got to do is take the trial balance figure, add in the 10,000 that we traded it in, and then take away what we've actually disposed of. Okay, look at the figures very carefully. The 80,000, remember, we've already added to the equipment cost. The 10,000 we can add in, because apparently we were allowed 10,000 on the cost. So in fact, we didn't pay 80,000. We paid 80,000 in cash, which has been accounted for, plus 10,000 trade-in. But we disposed of 40,000 of assets. It says so here. The old copy had disappeared, and it's on the books for 40,000. So we're taking that figure off. So what have I got? Okay, well, let's add these figures up together. So rather erroneous figure in there. Okay, so now what I've got is a figure of which is rather odd. I think that's a healthier figure, 328. And now the depreciation on that now remember, the depreciation rate was to be 25%. If I can find it. Okay. So, of course, had we not messed around with the photocopy, it would have just been 25% of this figure here, 278. Right? But because we hadn't accounted for these other two figures, we've had to factor that in. And remember that is a negative figure. So again, I'll put that in as a disposal. And 25% of that now gives us our depreciation at 82. Let me just check the balance, because that figure is now looks a bit too high, doesn't it? So remember what I've done. I've taken the trial balance figure, I add the trade in, and I take that figure away because that's been disposed of. See how easy it is. Normally I would have stopped the video, done it again, but I want you to see how careful you have to be with these figures. Now, at any point, you should stop the video, make sure you've understood what I've actually tried to achieve here. Okay, I'll move that out of the way. That's okay. And leave it for you to work with. But we do now have a proper figure for the depreciation. Okay, well, let's suppose you just took 25% of the value up here. Okay, not the end of the world, but you would have lost some marks in any examination. Right, okay, well, there's see, there was a fair bit of work on that. Now, again, what I'm actually got to do is I did do a profit on disposal. Okay, now that's not an admin charge, but we were told that depreciation is part of the administration cost. So that's actually a negative figure. Okay, it's a negative figure. Reason being, okay, is that, let me now sum that. It's actually an income. It's actually an income. So what I've now got is total admin charges now finally add up to 711,000. Well, there's a lot of work involved in that. But what I do now have is I can now work out my profit for the year. So let's be careful with this. So we start with the gross profit and we take away the three categories minus the distribution cost, minus the financial charges, minus the admin charges to give us a figure of 22,200. Let's say a lot of work in there. Okay, but we're not finished yet. Okay, well, this is a little extra that we haven't looked at before, and what we're gonna do it now. We're gonna look at the revaluation of land and buildings. The question did ask to do that. Now, we've not done that. Now, there are cases where land increases in value. In fact, there are many cases where land increases in value over time. It's a valuable resource. And of course, it holds its own very much so. So let's start now with the land and buildings revaluation account. Now, what we mean by that, buildings revaluation account, is what's the actual value of the land? Well, we're told it's been revalued at 720. There's our starting point. So let's start with the original cost. Land and buildings, the original cost. Okay, well that was done for us on the balance sheet, or trial balance, I should say. So there's our land and buildings at 600,000. Let's bring that in, because we've got what we've now got to do is we've got to take away from that the accumulated depreciation. At the 1st of January. Okay, it's almost like we're wiping off all the transactions of the past. Okay, we've got, because when you get rid of, on paper anyway, an asset, you must get rid of any depreciation associated with it. Now that was 72,000. So we've now got a book value. The old book value was 528,000. The new book value is 720,000. So what we've done is we have increased the value of our land and buildings to the tune of 192,000. So what do we call that? Well, you might be tempted to say, oh, on the book value, it was worth 528,000, but valuers have come in and said, good news, you know, it's actually worth 720,000. You might be tempted to think that's profit. Let's add that to the profit. And of course, pay tax on it and all the rest. Well, can you imagine if every company's assets, particularly in land, would increase in that value? For a start, they would have huge tax bills with no cash to pay it. And the other thing is, you can't just add profit for something that actually hasn't happened. You haven't sold that land, you still have it. So rather than put that gain inside your profit, we put it into what's called a revaluation reserve. And on many businesses, they will be very specific. They say, well, revaluation reserve for land. And actually sometimes even name which part of land that they do. So let me clear on this. When we revalue such valuable assets, don't put what looks like a profit into the profit and loss account, because if you do that, your profit is going to go sky high. So will your tax bill. And in fact, it won't be real. It won't be real. It isn't real until it's been sold, which is why we call it realization. Okay, that's when it becomes totally real. Okay, well, look, there, you know, I've made a couple of assumptions in there. I'm not to say that I have got it absolutely 100%, because there could be slight variations depending on the assumptions you've made, but we could both have slightly different answers, yet we could still both get our marks 100% for that particular question. That's a lot of work. And obviously this is a longer video, please, I've put the answer template in there for you, which is blank. Please play around with the data there and hold on to this answer if you're playing with this sheet. And of course, by all means, mess around with the numbers to see the impact it has on whether it's on the profit or whether it's on the revaluation. Okay, thanks for that. We'll see if the next two are as long as this one. Okay.